Welcome back. You're watching bnsn on ET Now show where we get you answers for all of your stock related queries. We are sub the 24,000 mark. We are sub 23,900 mark. And now we are actually testing 23,800 on the Nifty as we speak. The fall is only accelerated, almost nearing the 500-point cut coming in for the markets, 2% right now. Also, you have the broader markets as under pressure. The small cap index is seeing a sharper cut at that, while Nifty Bank is the one who's seeing a tad bit outperformance when you compare them to the benchmark indices. But nevertheless, Nifty Bank also trading with cuts of in excess of about 1% or so. But like I said, this is the show where we get you answers for all of your stock related query. Viewers, you can write to us on the number flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. And in case you've already invested in the stock, they mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. Talking about experts, today we have Kunal Bothra on the technicals, while on the fundamentals, we are joined by Gaurang Shah. Once again, good morning to both of you gentlemen. And let me kickstart taking the stock-related queries. This one is coming from Akhil. He's writing to us from Delhi. Gaurang, he wants to know your view. We did touch upon the entire auto pack a short while ago. You did speak about the auto counters and the auto ancillary space. And you believe that this could be a short-term blip that the auto pack is actually witnessing. He wants to know, can he look to buy Tata Motors and Motherson Sumi Wiring now?
Well, so Tata Motors definitely is. I think the stock has taken a hit from 1,050 plus levels, correct me if I'm wrong, and currently trading at about 825 or 850 odd levels. So we believe the long-term growth story is intact. There are certain difficulties from the short to medium-term point of view, which the company is working out to resolve it as soon as possible. They have registered better numbers as far as the JLR is concerned for the month gone by, that is October 24. New launches and of course the demand for new avatar launches of the existing model augurs extremely well. Commercial vehicle business is also doing quite well, and that is likely to contribute. So if you're a long-term investor, I would definitely say that use these corrections to get into the stocks that you have shortlisted. My only request would be that don't put all your money at one time. Use a staggered approach. I think a staggered approach is always good for the market, and it is always, it shows you as a disciplined investor. So start at current levels, and on dips, go on adding it. On the other company, Motherson Wire, well, we don't have a coverage, so I won't be able to give you a specific answer on this.
All right, so that's the take coming in on Tata Motors. We're moving on then, and the next query that I have, Kunal, is coming in from Satya, and he wants to have your take and suggestions with respect to entry levels for Nippon AMC. This is for the next 1 year. Does the chart show 900 plus levels coming in for this counter?
Well, I think so far the stock is just stabilizing or establishing a range. 640 to 740 is a range for Nippon Life. The stock is almost closer to the 700 mark today. But I believe that a breakout above 740 levels is what should take the stock higher. So in this kind of a market, it's always best to try and wait out for a point where the stock either retraces, comes back towards the support territory, or confirms a breakout, because anticipating a breakout in this kind of a market would be a bit tricky. But yeah, I think 740 levels and above, I think could be a breakout for at least another 100 point to 110 point trading range for Nippon Life. So maybe post that breakout, once the stock sustains above those levels, we can expect the stock to move towards 800 to 840 mark at least.
All right, this next one is coming to you, Gaurang. This one is from Ghosh Dada. He's writing to us from Delhi, and he has Yes Bank and Vodafone Idea in his portfolio. He's suffering huge losses in both of it. But he's saying there is no problem because it's fine, because his overall portfolio is okay. But what to do specifically about both of these counters? What's your view? I like the way how you're raising your eyebrows, the fact that the viewer is still with both of these counters despite that bounce back and the sharp crash, and there's not been a recovery in either of them.
He must have guts of steel, Cheryl, to be very honest, and he's quite bold enough. He's got a lot of risk-taking appetite, I believe, with the kind of knocks both these stocks have taken. So let me come to Vodafone Idea first. There was an FPO some time back at 11 rupees, and on that FPO, we had come out with a long-term subscription note for investors who have elevated risk appetite and who have at least 1.5 to 2 and a half years plus kind of time horizon. The reason being that the recent Supreme Court verdict as far as the AGRs are concerned has already had its impact on the stock price, because we saw it correcting from 12 or 14 odd rupees to 8 odd rupees currently where it is trading. The second problem is the debt on the balance sheet. The third problem is the month on month loss of subscribers that this company is having. And the fourth being the company is still living in 4G. 5G is yet to happen. So there are multiple challenges. The management has also mentioned that the recent verdict on the AGR from the Supreme Court is not going to have an impact as far as their funds raising capability and capacity is concerned. So going with that assumption that the management be able to garner funds and possibly migrate to 5G from 4G and have a larger, etc., etc. We have a coverage, but again, there's going to be a pretty wrong drawn kind of patient investment as far as Vodafone Idea is concerned. For Yes Bank, I think it was about last week, correct me if I'm wrong, that we saw the numbers. The numbers were better than what the street expected, no doubt about it. But we don't have coverage on buy, sell, hold on Yes Bank. But let me say this. This bank is again, similar to what I described for Vodafone Idea. It's highly leveraged. Earnings differ from quarter to quarter. 1-2 quarters, great earnings. 1-2 quarter, equally disappointment. No specific comments, but it's going to be a tall challenge for the management to evolve from here as a investment idea as far as Yes Bank is concerned. So I will restrict my comments on buy, sell, and hold for Yes Bank.
Also, one of the reasons could be why viewers have been drawn to both of these counters is the fact that they were in trouble, and then you saw some sort of a step in by the government also. That also could be one of the reasons why that these people have still have faith in these counters irrespective of the fall, right?
Cheryl, that's the thought that you should not have. Well, you are not a government. Government take a beat in case if it has to, in case if things don't go right in terms of bailing out these companies are concerned. But if you are an investor, you can't be replicating what the government does in your investment thought process. You have to be rational enough. And I'm quite sure, if you follow this kind of pattern, then there will be many companies who will be lining up outside Delhi and waiting for government to bail them out. So I don't think that this is a right process to think in terms of government being a party to bailing out the company in terms of operational capability and capacity is concerned. You should look at many more things, not only just that the government has bailed them out.
Sorry, Gaurang, I actually put you in a spot with that because that's one of a word of caution that is there for all of our investors, because when you are actually looking to invest in these companies, you need to do your thorough lessons. You need to see what's the background, how the companies have performed and how they are going to perform going ahead, and then take a call rather than just move into these companies based on news flows. Isn't it, Gaurang? In short and sweet
Absolutely
terms?
true. Because see, I mean, you have to look at when you're looking at company from an investment perspective and you have 1.5, 2, 3 year kind of time horizon, then you have to look at the fundamentals. Government trying to, provide some kind of financial assistance should not be the thumb rule on which you decide whether you should invest or not.
All right, Kunal, what's your view then? Because we've got a thorough lesson coming in from Gaurang when you talk about fundamentally how should you view these counters and when and how should you invest in them. What's your view on the charts, Yes Bank as well as Vodafone Idea?
Well, investing is out of question to these names, because of the kind of quality these stocks would probably, have as compared to many of the other peers. And I think sticking to large cap names makes tremendous amount of sense. So there's a point in the market where you would want to just about trade these stocks, but investing is something which is a completely no into these kind of names. Even this leg of correction, so there could be one anticipation that maybe these stocks have fallen down by 30, 40, 50%. So maybe these stocks have come back to an attractive point. But then historically we've seen this over the last decades and more, that whenever the market gets back into a recovery, it's the large cap stocks, the more formidable ones, which recover first. And then these small cap names or beaten down stocks, they are the ones which rally late and last in terms of the recovery for the overall market. So I think in either of the scenarios, I would probably not recommend to buy or hold these names even at current levels.
All right. So that's the technical as well as fundamental view coming in on Yes Bank as well as Vodafone Idea. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. As we come right back, we will be taking more of your stock-related queries. Stay tuned. Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries there. And moving on to the next query that I have, this one is coming in from Anil from Jalandhar, and let me take it from you, Gaurang. He has a query on BEL. He's been holding 30,000 shares and his buy price is 235 rupees. He wants a 3-year view on BEL. What to do with this one?
So firstly, Shrishti, I hope this is not the only investment because, and of course not having a large exposure because on the fundamental side, while it is prudent to invest in fundamentally sound companies, it is also not advisable to have a large exposure of your portfolio to a particular sector or a company. So just bear this in mind. As far as the question on BEL is concerned, well, Bharat Electronics, we have recently upgraded our target after the earnings, which was better than what our estimates are. The current target that we have set aside is somewhere close to about 325. 3-year view he wants. So, just looking at what the company has delivered and what the management has said in terms of future outlook for business growth. Well, one point is very, very strong that the defense orders are going to come in thick and thin for defense related companies because of the Make in India, Made in India policy, because of the opening up of foreign or domestic investments into defense. And of course, the prohibition list, which is right now 3, there are likely possibility that more number of equipments and ancillaries are going to come under prohibition list, wherein imports will not be allowed and domestically outsourcing will be preferred. In all these scenario, we believe that defense related companies will do well. For Bharat Electronics, stay invested with a target of 323 to 325. If earnings improve, Shrishti, then these targets would get revised.
All right, so that's the view coming in on BEL. Let me take this next query then, and this one is coming in from Mohit. He's writing to us from Ludhiana. He has HDFC Life 200 shares at a price of 599. Kunal, he wants to know whether he can hold on to this one for the next 2 years. He wants a guidance on how should he actually look to keep or exit out of HDFC Life in his portfolio. It's making profit luckily for him.
Yeah, it's been a good stock, and I think interestingly, the last quarter for HDFC Life was very, very attractive in terms of the price gain from 600 towards a point when the stock was almost at 750. Now, one way we can say that the stock has been outperforming or being resilient in this last 20-25 days of the market correction, where it's been stuck into a trading range. But I would believe that holding on to the stock with maybe a trailing stop loss could be a better strategy, because in case if there is a leg of underperformance which creeps into the stock and if there's a sharp correction, there could be a point where the stock may retrace back towards 650 or slightly below those levels. So I would suggest to hold on to the stock as of now because of the degree of outperformance the stock has shown on relative basis. But then I think maybe keeping a stop loss of 695 on closing basis could be a better strategy for HDFC Life.
All right, that's the take on HDFC Live. But Kunal, the next query is coming in on Reliance because at the opening, like Cher was mentioning, that on a YTD basis, Reliance returns have now turned negative. And Subrata Mukherjee wants to know, will that be good strategy to now book the loss in Reliance Industries and make a shift to Narayan Hydraulic? He wants a long-term suggestion on this one. He didn't share the buy price of Reliance Industries, but what's your take?
Well, if it's a temporary shift, then it's a different kind of a strategy altogether, because Reliance on the short-term charts is showing definite amount of weakness. The stock has broken below the adjusted price of 1300 today, so which means that there could be a further weakness into the stock price going forward. Narayan Rizale, on the other hand, the stock has been a lot more range bound. So we've seen the stock stuck into a 50-70 point range, 1200, 1220 as a support, and then 1270 approximately as a resistance for the stock, which means that there could be a degree of outperformance which could be there. But as a strategy overall, from long-term basis, I would not suggest that, because I think whenever Reliance makes a comeback, I think the comeback would be very strong and ferocious into the stock price. So I think buy on dips could be a better strategy for Reliance Industries if you're a long-term investor. Depends on your time horizon.
All right. Right, that's the advice coming in on Reliance Industries to not make a shift if you are a long-term investor. But Garang, what are your views on the same, given the fact that for today there's been a sharp sell-off and on a YTD basis the returns are now turned negative, and that's the first time that we are seeing after 2016. What's your view on Reliance Industries? Will that be a good strategy to like move out of this one and make a shift to any other stock? Maybe Narayan Hyderalaya is what Subrata Mukherjee is looking at. What's your view on the same?
I think this is going to be difficult, Shrishti, because we do have coverage on Reliance Industries as well as Narayan Rudalaya. So, keeping with Reliance Industries, well, we remain positive on the stock. The announcements made in the AGM gone by have been very, very strong. The stock has very recently got adjusted to the bonus announcement that the company made. Business is diversified for Reliance Industries, whether it is the traditional historical family business or whether it is businesses which have evolved to contribute more on the balance sheet, likes of Geo, likes of retail, likes of digital, likes of oil to chemicals, to the extent of green hydrogen that the Honorable Chairman has spoken about. So the outlook looks quite strong. The problem here is, Shrishti, that the recent selling that we saw from the FIs for the entire month of October and probably even today and the days to come, their investments is largely into large cap names. And when they come on the sell side and sell the way they have sold, not only will your Sensex and Nifty come down, but the large cap stocks will also have that kind of reaction because they have their investment over there and they have to lighten up. So, notwithstanding the immediate short to medium term, if you're asking me for long term, then I would say stay invested. 1520 could be the targets. And if the earnings deliver, here again, the targets would get revised. So, I remain positive on Reliance Industries, but since the question is on Narayan Rudalaya, prudent to give a disclosure that we have a buy call over there as well.
All right, so that's both of these stocks that are on Gaurang's radar, has coverage on both of these counters and also positive on both of them for the longer term. But coming next on this query coming from Anand, he's writing to us from Mysore. Kunal, this one is for you. He wants to know about Canara Bank. He has about 3,086 shares of Canara Bank, which he purchased at 115 rupees per share. For the longer term, what should he do? Stay put with this one or look to exit out of it?
See, I think my sense is that many of the PSU banking stocks have actually started to show signs of relative strength. Now, these stocks over the last 3-4 months had already gone through a correction. For example, Canara Bank made a high which was around the 120 or 125 odd mark in the month of April or May, and I think from there the stock had gone through a process of correction. So, which means over the last 3 odd months, we had actually seen many of these stocks on the PSU banking side already going through a phase of correction. Right now, these stocks are just about stabilizing, and there's been a relative degree of relative outperformance for many of these names with respect to the overall market. So, which means that whenever the market stabilizes, and if there is any kind of a sector which shows signs of first strength of recovery, it should be the PSU banking name. So I think in that anticipation, I would suggest to hold on to Canara Bank at current levels, and my expectation is that whenever the PSU banking lot starts to get into a recovery, we might expect the likes of Canara Bank, etc., to at least come back to a cost price, if not more.
All right, that's the take coming in on Canara Bank. But Kunal, once again coming to you, because this query is coming in from Gautam from Mumbai, and he wants advice on Bharti Airtel. Any good entry point that you can suggest him to enter Bharti Airtel for the next 12 to 18 months?
So I think maybe closer to 1500 could be a point. So the previous leg of consolidation the stock had shown was in the month of June, July, August, where the stock was stuck into a range of 1460-70 towards 1500 to 1520 range. Generally what happens is when a stock gets into a correction, even the larger cap formidable ones, even they go back into their previous consolidative ranges, which means sub the 1520 mark could be a good starting point where you may look to add Bharti Airtel. So I think 1500 could be a pivot, plus minus 20-25 points is what you can expect as a trading range. That could be a very good entry point.
Alright, this one's come from Jay Krishnan, writing to us from Kerala. He has Polycab in his portfolio at the price of around 7,210 rupees per share. Gaurang, he had bought this one for the medium term. Now he wants to know what should he do with this counter, and if you are suggesting an exit on this one, then is there any other alternate stock that he can look at in order to compensate his loss?
Sorry, Cheryl, which is the name of the company?
Polycab India, the buy price is 7,210. It is sub his buy price and sharp one at that.
So, Polycab India, we had a buy recommendation, but our targets were in place. So, we have come out with a sell recommendation currently as I see it on my coverage list. So, we have a sell recommendation over here. I am sorry, I couldn't get the acquisition price of the investor, but just in case he's concerned about.
7,210, Gaurang. It is around
Yeah.
7,210.
Okay. So I think I mean, the investor may be taking a hit over here because the stock prices have corrected from the levels where he bought it, the investor bought it. In case the investor decides to exit from the stock because we have a sell recommendation, and if I have to give him an alternative investment idea, then I would pick M&M from the four-wheeler stroke commercial vehicle stroke agri equipment. The reason being, despite of the market correcting more than 10% or 11% in the recent sell-off from the FIs, M&M is one stock which has actually held out quite smartly compared to the large players, which form the Sensex and Nifty, and even compared to the peer players like the Tata Motors and the Marutis of the world. So, if you want to make a shift from Polycab, I think M&M would be a better choice. And as I mentioned, we have a sell recommendation on Polycab.
All right, so that's the day coming in on Poly Cab as well as on M&M. But moving on to the next query, and Kunal, this query is coming to you. This query is coming from Tina, and her query is this a good time to add GRSC, HAL, Mazgaon Dog or any other railway counter that you can suggest for a long-term investment, either defense or any railway stock?
See, it's a good starting point where you can look to add or start adding these names. But then, my sense is that I've seen this historically that whenever a sector which starts off to be an underperformer in the first leg, and when the market moves up higher, this sector starts to get into a correction. Then comes a point when the market falls, and then this sector starts to act as more of stabilizer over the very short term. But then eventually, a last leg of selling is what happens into these stocks, and I think that last leg of selling is what you should need to wait out to capitalize in entirety. So my belief is that you can look to start accumulating at current levels, but in case if the market correction say accelerates into maybe another 500 points on the Nifty or slightly more than that, then we can expect that many of these defense names could also get back into a corrective phase, and they may not just retest their previous lows but break them by a decent margin. So that could be a very good entry point for you from a long-term play.
All right, so that's the view coming in on some of the defense counters, railway counters. But on that note, we slip into a break on this edition of Buy Now, Sell Now. More stock queries on the other side. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of the stock-related queries. Markets under pressure. Still below that 23,900 mark, some sort of semblance over the last few minutes, but not that much of sorts. You have Reliance Industries that has actually raised its YTD gains on an intraday basis as well. But Kunal, the next question that I'm coming to you on is about markets. We did speak about markets at length and got your view talking about the markets, but Venu, who's a senior citizen from Chennai, wants to know that as expected, the markets have cracked. But what is the strong support level for Nifty at which buying is expected to emerge now?
See, I think my sense is that looking at the way many of these stocks have behaved, that the Nifty should break below its 200 DMA in the next maybe 1 to 2 weeks, or looking at the pace of sell-off, it could be in the next couple of days. But I think a retest below the 200 DMA is where should be the first important retest for the indices. So I think 23,400, 500 is what I would expect as the first leg of strong support for the index. But if we break below those levels, and what could probably matter is the the bifurcation in terms of stocks and sectors, which could correct further. If in case, for example, we are now seeing two outperforming sectors so far, where you've seen the bank Nifty, private sector banks as well as the PSU banking lot, specifically in the financial services index. These are the two sectors which have reasonably outperformed in this leg of market correction. If these sectors they start to show signs of correction, then the pace of correction for the Nifty could also accelerate. But if the underperforming sectors like auto, FMCG, etc., if these sectors they take the index further lower, then we may expect that the Nifty would stabilize at 23,400, 500 range. So ideally, it's very difficult, of course, in this kind of a market scenario to try and pinpoint a strong support level. But we generally wait out for those points where the correction gets into a lot of excess it looks like that maybe 23,400 mark could be a point of that, first point of that excess.
All right, so that's the take coming in on the markets, because it's Nifty Bank as well that is seen to be drifting lower, almost 600 points of cut coming in on that particular index. But moving on and getting back to your stock related queries then, and the next query that I have is coming in from Shankar from Chennai, and let me take it from you, Gaurang. He wants a view on RK Forging. Would you recommend a buy at RK Forging at these levels, or would you suggest to wait for some bit of a dip and then make an entry? Do you like this stock or not?
Unfortunately, Shrishti, we don't have a coverage on this one, so I won't be able to give a specific answer. I beg your pardon on this one.
Kunal, any take on RK Forgings from your side?
I think it's been a good stock overall. So the longer term charts are very, very attractive from a point where from 2020 the stock was almost at 30 rupees or 40 rupees towards the point where the stock recently managed to break past about the 1000 levels. Now, I think a buy on dips, of course, could be a very good strategy for these names, and especially at a point when the stock would probably find first major support, which I think is closer to 820, 830 for RK Forging. I'm not sure whether the stock would retest those levels, but very recently, for example, I think last week or so, the stock made a low towards 860 mark. So it looks like that 830 seems to be a very strong support for the stock, and the recent bounce back is probably a an indication of that. So I think closer to 830, 860 levels is what you can look to buy.
All right, so that's the take coming in on RK Forging. Let me take this next query then, and this next query that I have is coming in from Balan. Wants to know about buying ICICI Bank, or for the matter of fact IRCTC right now. Canara Bank and Reliance, we've spoken at length in the show, but Kunal, what's your take on ICICI or IRCTC for the matter of fact?
See, IRCTC, I would not suggest a buy at current levels, even though the stock has been an underperformer. As I mentioned earlier, that there could be a possibility that there could be a last leg of sell-off which could happen into the stock, and that could be a point where you could look to buy. So maybe closer to 770 or thereabouts is what I think could be a much better level to buy IRCTC. ICICI Bank, on the other hand, I think could be a good buy on dips candidate, and especially given the point that the bank Nifty is outperforming, relatively been very, very strong. Even with respect to today's sell-off, or with respect to this last 10 days of the second round of correction for the index. So I think Bank Nifty is the one which is outperforming, and ICICI Bank is of course amongst the topmost relative in a strong stock from the entire pack. So ICICI Bank is what I would suggest as a buy.
All right, that's the counter from the banking space, ICICI Bank, you can look at. But moving on, the next query, Gaurang, is coming from Balakrishna from Chennai, and he wants an advice on TTK Prestige or Havells India. Any stock that you like at this price point for a fresh entry, and any fundamental triggers that you spot for any of these names?
So TTK Prestige, Shrishti, happens to be on our buy coverage, and we've been maintaining a buy for a long time. Currently, well, the target is very close to where the stock price is, somewhere close to about 905, 910. But in case if you're looking at a long-term investment, then definitely I would advise to invest in TTK Prestige. The only problem is that volumes are not that thick. But if you're a long-term investor, then that should not be a deterrent.
All right, so that's the take coming in on TTK Prestige. Kunal, coming to you, the next query that I have is coming from Deepak, writing to us from Bangalore. He has 3,000 shares of L&T at a price of 3,825 rupees per share. He wants to know what's your view coming in on short term for the counter? So
it looks to be a good stock on a relative basis. I think the major part of the price damage seems to be now behind for L&T. The stock corrected from 3,800 levels, 3,800, 3,850 mark towards 3,250 odd mark. So which means a decent part of a 15-20% correction is now behind for L&T. In case if the stock corrects, say another 50-70 points, corrects towards say 3450 mark or thereabouts, that could be a very good point for you may look to buy on dips for L&T. So I think it could be a good buy on dips candidate. You can start from current levels, but I think buying the stock maybe sub the 3,500 mark could also be a good price point.
All right, that's the take on L&T. But Gaurang, the next query that I have is on Ola Electric. I do believe and I do note that we have discussed this previously as well. But given the fact that the investors feel stuck in this one, have to put it again. This query is from Ajit. He has bought 3,000 shares of Ola Electric, but his buy price is at around 130 rupees. He's definitely at a loss at these levels. What should be the strategy and what to do next?
Shrishti, I am definitely sure that you will recollect what our view on Ola Electric was. First, let me give a prudent disclosure on the IPO with a range of 72 to 76 and a higher end of 76. We had given a subscribe recommendation to the IPO of Ola Electric. Uh, while giving this recommendation, I had also made it very clear that you need to have at least 2.5, 3 year kind of time horizon because first of all, you have a loss on the balance sheet of about 1,500 crores. Second is the unpleasant experience of the customers as far as service related issues are concerned. I'm sure you, me, and all of us have seen and read about the plight of the customers as far as the post product delivery service issues are concerned. Third being the bike that they launched on 15th of August this year would be available for delivery next year, Diwali, around about this time. During this time, there's going to be a whole lot of competition that's going to come up, and this competition is really picking up a lot of space as far as EVs, scooters, and bikes are concerned. Uh, the other point of concern is the gigafactory that they mentioned. So there are issues. Unfortunately, a lot of investors bought into this stock because of the post-listing rally that we saw, which was actually a suckers rally. I'm sorry to use that word, but I think you need at least longish time horizon. I know it would be painful, patient period of waiting, but in case if you want to stay invested, and that's the kind of time horizon you need to have. And if you have investable amount, then take advantage of this correction close to about 80 and below that. If you see the stock price is slipping, then I would definitely urge the investor to average because of the elevated investment levels.
All right, so that's the take coming in Ola Electric. With that, we are totally out of time on this edition of Buy Now, Sell Now. Thank you so much, Kunal Gaurang, for joining us on the show and resolving viewer queries. And viewers, with that, we come to the end of this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. But stay tuned, Markets at Noon is coming up next, and I'll be joined by Soumya Sarkar.
If you like this video, then like, share and subscribe to ET Now.